So Sam, there's been a fair bit of focus on the costs and the risks and some of the downsides associated and the relative merits of this new regime that's being proposed, called the BEAR. How about the benefits? Are there any benefits that can be derived by an organisation?
Sure. So, I think the first thing to start off with is there are some genuine and legitimate concerns around the detail of what's being proposed, and submissions are in and those will be worked through. I guess we see that there is a significant potential benefit from BEAR, which fundamentally rests on the fact that there is a lot happening in banks at this point in time. A lot of change, a lot of big decisions are being made as those organisations transform and change their operating models. In that environment, it seems kind of self-evident to us that any change that drives clearer accountability around decision making and involvement in decisions must have the potential to have a benefit.
So what sort of benefits do we think might play out?
So look, it's probably worth reflecting on what we have at the moment. So decision making in big complex organisations involves a lot of people. And I think if we reflect on organisations as we stand, and particularly the big banks, typically decisions involve a lot of people, and a lot of people are involved in a lot of decisions. So right through the kind of layers of accountability, responsibility, being consulted and informed, there are a lot of people involved. And as a result, that takes a lot of time. And we kind of have this idea that at each layer in that decision-making process, because there isn't necessarily complete clarity around who is accountable for that decision, you get this kind of deficit in the commitment or the diligence with which decisions are made. So even if everybody's giving 95% to each of their contributions to that complex decision, nobody's making that deficit up. So by the time it gets to those who are accountable, who see themselves as accountable, they actually have very little time, potentially have quite a lack of transparency around what's happened before in forming that base of decision. And as a result, we're not sure that the decisions are actually necessarily always that strong and certainly not that fast. So the opportunity, as we see it, is that by giving clarity around accountability, you're able to then be very clear about who that person needs, or those people need, to inform them, who needs to be consulted in the decision-making process. And as a result, while the individuals themselves might spend longer thinking about the decision that they need to make and their role in it, the elapsed time might be quite a bit shorter. And in fact, the quality of the decision and the speed with which you make it as a result might be better.
So there's been a fair bit of noise around the executive accountability regime, Sam. What are some of the concerns people are raising?
Sure, there certainly has. So the consultation period from Treasury has just closed. And the submissions were released publicly very recently. And there are definitely common themes within those concerns, and also common to the concerns that were raised in the UK as the SMR was kind of rolled out. So if I could try and kind of capture them all in a few different categories. I think firstly there's a concern around regulatory overreach and the necessity of some of these proposed reforms. So for examples of that would be the coverage of this regime only being on banks, and the fact that it extends to subsidiaries and foreign branches of those banks. There's also the question around whether it's needed. So on remuneration in particular, there's a sense that there's a lot of governance and regulation around remuneration in existence already, and perhaps this might not be necessary. I think the second element is really around overlap and potential for inconsistency. And probably the most clear example of that is around director duties, and whether or not the proposed regime actually is in some way counter to very long established governance and corporate governance principles, and particularly non-executive director duties. And then I think if I was to put kind of one overarching kind of element in there, it's for the individuals themselves, this concept around kind of fairness. Both fairness in terms of what the expectations are and what those are defined as, and there's some work to do around that, and then fairness in terms of consequence. So that notion of whether or not individuals are going to get the chance of a fair trial if APRA is able to disqualify or remove people from those positions.